there are 5 top financial metrics that every business owner needs to track. I'm Rivkin, founder and CEO of ERPS Group. Over 26 years, we have been working with the business owners, not only handling this boring accounting and tax stuff, but we help them to transform their businesses and boost their income. I can guarantee you that I can find you up to $100,000 in hidden cash flow in your bank accounts that you didn't even know that you had if you book a strategy session with me. So if you like to take advantage of that, then click the link and I'll see you at my strategy session. The first thing that you need to keep track of is the revenue. Revenue, this is something that you earn. This is what your clients paying you or your customers for the product that you sell or for the services that you perform for the clients. So why is that important to keep a track of these metrics? Well, because if you don't keep a track, then you don't know if you making more money comparing to what you made last year. So typically the way that I do it in my business, and the same thing we do when we work with our clients, we create these goals. Okay, we take last year revenue, and then based on last year, when the new year starts, we create the plan. It's not just the budget. So I'm not talking about the budget. We're talking about like a forecast projection of how much we want to be making next year. So let's say, just give you an example. So let's say like last year you made like $1 million. So that would be your base. So the next thing is, okay, so how much do you want to make this upcoming year? Do you want to increase your revenue, your sales by 10%, by 20%, by 30%? This will give you the number, the metrics to analyze, to see, okay, like what is the possibility, what are you working with? So let's say you want to double, you can even double, you can even triple your revenue. This is all great. Now let's say if you want to double your revenue from 1 million, next year you want to make 2 million. All right, so the next step is that you're breaking down how much were you making every month. And then if you want to double your revenue, so that means that you need to double that revenue every month. You see, so knowing these numbers, knowing these metrics, that's going to help you to start putting this financial plan together. So the next thing is, if you're keeping track of all this revenue and financials, then you will know, okay, if let's say January started and you had a goal of making 200,000 in January, but then if you're not keeping track of that, how do you know if you hit your goal or not? So therefore you need to not only just put these metrics and these goals for the next year and then forget about them, or maybe revisit them at the end of the year. You need to keep a track of that on a monthly basis. So this way you can see, okay, are you getting closer to your monthly goal, or you're not even near to what you want to accomplish? And then obviously you can take it even further to put it on a weekly basis, bi-weekly basis. So this way you can see how you're doing. So the next metric that I would like to share with you would be the cash collected. So in my business, and the same thing that I advise when I work with my clients, is you want to collect cash on everyday basis. And you want to make sure that you keep track of all this collection. So in my business, we keep a track of how much money we collect on everyday basis. So everyone in the company is aware of that. And at the same time, at the end of the week, my manager, she sends me the report, like all the metrics throughout the week, and one of them shows how much cash was collected throughout the week. So why is this important? Well, now we're gonna go back to the first metric that we were talking about. So as in the example I gave you, if your goal is to double your revenue, and now that you know that you want to double your revenue from 1 million to 2 million, now that you know that, let's say for January, you need to hit the goal of 200,000. So obviously the way for you to know this is to keep this metrics of how much cash are you collecting. And obviously if you're going to do this only like once a month, then you're not going to see, okay, are you getting closer to your goal or not? So therefore in our firm, so we keep track of all this cash we collect on a daily basis, and then every week whenever I get the report from my manager, then I can plug the numbers and see, okay, how far are we from the goal, or are we getting closer to that? So that's why it's very important. Another reason why important to keep the metrics for the cash is you paying all these expenses. You have to pay your employees the salary. Some of you pay it probably weekly. So you want to make sure that money coming into the bank account. At the same time, also you have all those other bills that you have to pay. If you sell product, you have your vendors to pay, you have rent, all these other expenses. So if the cash is not coming on everyday basis, that means that you don't have enough money. And I see this very often. Whenever I work with the business owners, they don't have enough money and they're constantly running into this problem where they don't have enough to pay their bills. Another thing also, those of you that in services, and I see this very often, like those that perform services, like I have doctors or like medical spas that perform services. So if they don't work, then there's no money coming into the business. The third metric that I would suggest for the business owners to keep track of is revenue per employee. Those of you who don't have employees, then I strongly suggest you to revisit that, because in all the reality, if you don't have employees, that means that you don't have a business. You are just self-employed. So basically you're just working by yourself, for yourself, and that's not a business. So definitely would suggest you to revisit that. But those that do have employees, so what you want to do, you want to keep metrics of what are they producing, because you're not just paying them to sit and look pretty and look at the ceilings. You actually want them to produce, and you want them to bring value into the business. So what we do in our business, and something that whenever we work with the business owners, is to track revenue per employee. So ideally, at least each employee needs to be earning between at least 250,000 in revenue. If you in a great business, ideally, it's if you get it from 250 to 500,000 in revenue per employee, what it means is that your employee, whatever work that they do in the business, the work that produces, it provides 500,000 in income. So for those of you like who in services or they in selling the product, it might be like hard to calculate per employee, but in reality it's actually very easy. Don't overcomplicate. The way you're doing is, all right, how much revenue you make in the business, how many employees you have, and then you just divide that number. So basically, let's say if you're making 1 million in the business and then you have 10 employees, that means that each employee only brings 100,000 in revenue in business. So knowing that, you know, okay, that's not good. So then there's potential for each employee to do more work, and that's for you to figure out what else can they do so you can increase that revenue and then increase the revenue per employee. The fourth metric that we keep track in our business is marketing. So first of all, you always need to market, because like if you don't market your business, then no one knows about your business, and then that means that new customers not going to be coming, they're not going to know about you. That means low revenue, you're not making more money, you're not bringing more money home. So marketing is very essential, and you do want to keep track of the marketing. So marketing, there's a lot of different things that you can be doing in marketing. So if you're already doing this in your business, fantastic. So now what you want to do is you want to start keeping a track of that. So what you do is, okay, so let's say if you're just doing like a social media post and then you promote them. So you wanna know how much it costs you to promote this post. Then the next metric, you wanna know what is the conversion lead. So if you promoted the post, let's say you paid like $100, okay, like how many leads did you get on that $100? So you definitely want to know that. At the same time, if you're doing the post on social media organically, you want to see the metrics. Okay, like what is the viewers, how many viewers it brought you, how many impressions it brought us. So we have our marketing department. We have a person who does marketing, and every week, at the end of the week, she provides the reports to me where in these reports, So we do marketing everywhere on Instagram, Facebook, like all the social media channels. So what she does is like throughout all these channels, she gathers all this weekly information based on all these organic posts that she posts over there, and then she keeps all these metrics. And then besides just doing the metrics, which is great because that's what we're talking about, at the same time, based on these metrics, and that's why it's important, she provides the report to me. And the report says, okay, like which post did the most impressions and had the most viewers, it was the most popular, which one was not popular. So what does it provide to me as the owner of the company? So now we can see, okay, so based on these conclusions that she provided to me, okay, so we already know which post doing better. So that means that we're gonna do more of that. And those that didn't do very well, that means we're gonna do less of this. And you see, like all of this, obviously it's all tied up to the money, to the revenue, because paying this marketing person, posting, doing all this post, all this creating all this content, it costs money. It takes time, it takes energy. So then we want to make sure that whatever we're doing is working. But then if we're not tracking this, we don't know what's working, what's not working. And if we just keep doing the things that don't work, sitting and expecting to get different results, then we're not going to succeed. So that's why it's very important to have these different metrics. There's much more metrics in marketing, and if you would like to learn more about it, then click the link below and download the CEO dashboard, and you're gonna get all of this metrics, all this information that I'm sharing with you. And the last fifth metric that I would like to share with you is the sales metric. So if you don't have a salesperson, if you don't have the sales department, then I would suggest for you to revisit that, because you do need someone to constantly sell. Because at this moment, if you don't have someone, that means that you are the one who is selling. And okay, if that's the case, if you are the one who is selling, or if you do have that sales team, so you want to make sure that it converts clients, that it's producing result. So therefore, obviously you need to have metrics around that as well. So you see, like everything has to be measured. One of my favorite sayings is what gets measured gets done. Because if you're not measuring, you don't know if it's done, or if it needs to be done, and how you're doing. So the same thing applies to the sales. So even if you don't have anyone, if you're doing it all by yourself, you just want to see how it works, if it actually works. So what I mean is there's different number of metrics that can be done around sales. So number of sales calls that you do throughout the day, number of the clients or prospect clients you reach throughout the day. If you book appointments, okay, how many appointments you book, what is the conversion rate? So all of this, you want to make sure that you track all these numbers. At the same time, you also want to know what is the sales cycle. So let's say, okay, you know, like you did like 200 calls throughout the day. Out of these 200 calls, let's say you booked for yourself like 10 meetings. Out of these 10 meetings, only maybe 2 showed up at the meeting. And then at that meeting, no one signed up. Okay, so you see, like the conversion rate is very low. So now you have to follow up, then you have to call again, you have to schedule all these meetings. So this is all the sales cycle. And you want to make sure that you're tracking all of this, and you know if it's working and if it's not working. So all this data are very, very important. At the end of the day, also by tracking the sales data, it's going to allow you to see how much it costs for you to acquire that one client. And then based on that, how much are you actually charging that client that you're acquiring? So all this data is very important to be measured and to be tracked. So here we go. I just shared with you the 5 top key metrics that you absolutely must track in your business. And if you're not doing this, and if you don't know how to do this, then I'm sharing with you the CEO dashboard that I use in my business, and my clients use it as well. You can click the link below and download this absolutely for free and start using this right away, right now, and see the results it's gonna provide in your business. But if you don't have time to do any of this, or you don't understand and don't know, or maybe don't even like the numbers, No worries. What you can do is you can click the link below and book a strategy session with me, and I can guarantee you that I can find up to 100,000 in hidden cash flow in your business that you didn't even know that you had. And if you found value in this video, please subscribe to my channel so you can get faster to financial freedom. And remember, it's all in your hands. Thank you for watching, and I'll see you in my next video.